Here is the story of three people named Rajiv Gupta, Srinivas Reddy and Pooja Kumari, who have shared with us their journey through the year 2022 as investors. What's strikingly different with each of these investors is that Rajiv ji has decided never to invest again in equities as he feels this is not his cup of tea. Srinivas ji complains to this day that his earnings in the calendar year 2022 are down 25%, but in the past he was a happy man, especially in years like 2020 and 2021. And then there is Pooja ji, all smiles and nothing that she complains about the year 2022, as her portfolio has done about 6% positive even in a year like 2022. All three have seen the markets behave the following during the past 3 years. Rajiv ji equates the meager 3 to 3.5% returns in the year 2022 as stocks से अच्छा तो gold है, 11 से 12% returns तो मिल रहा था मुझे gold में. Srinivas ji equates the meager 3 to 3.5% returns in the year 2022 as portfolio saw a hit of 25%. All that I had made in 2021 is washed away in 2022. What a waste of a year. And Pooja ji equates the meager 3 to 3.5% returns of Nifty in the year 2022 as I didn't lose money even in these times of gloom and doom. In fact, I made 6%, but that's just covering the inflation, I guess. I'm not complaining. The year 2022 has taught me so much. Now, all these three reactions are true and represent a person like you. Yes, you. As you are watching this special New Year's episode, preparing to make the most of 2023 from what 2022 has taught. What do you resonate with amongst the three investors? And if we were to tell you that there are people who have made even 12% plus returns on a portfolio level, even in a year like 2022, where Nifty just grew by 3 to 3.5%, would you believe it? What could you have done differently? And what will you need to do differently in the year 2023? 2022 is a year that's taught someone the most valuable lessons as an investor. 2022 can be termed as a best year if you see it from the right perspective. Stay with us as we unveil you what you should be doing if you resonate with any of the three investors whose story I just mentioned above. Let's live 2022 from the eyes of investors like Rajiv ji, Srinivas ji, Pooja ji. Maybe you are one of them and you will find the memories good or bad. Let's not debate these, but relive the butterflies in the tummy, as people say, the events, the periods of 2022, and see what we could have done differently. Investor trepidation before the budget and a string of disappointing quarterly performances caused the Sensex and Nifty to experience their greatest intraday declines in more than 9 months. On January 24, 2022, the Nifty was down 468 points or minus 2.66% on a single day. Experts quoted, "Additionally, how the market performs before the budget will depend on the outcome of the FOMC meet on January 26. Along with other things, traders maintained their caution before the January derivatives contracts monthly expiry." So, if you're looking for a dream start to the year 2022, it wasn't to be. Now, see the headlines that appeared on your mobile phones. So with so much of chatter over the budget and Fed FOMC meet and the indices coming down big time as the sharpest intraday decline for over 9 months, what did you do, honestly speaking? Were you buyers at this time, or were you a seller of your own stocks? Remember, the markets closed on January 24, 2022, it was a Monday, on 17,149 levels, with close to 3% decline in one single day. Just write the answer and revisit this, if I may please ask you. And this is a favor I need from you. Just write what you did on this given day, on a diary, on a notepad, whatever that you can find. And as an investor, you will see what you resonate with at the end of the episode. Do that, yes. Now, please do this for me. Write to me at sanjeev.anand@equentis.com, sharing your experiences, and I promise you I'll get back to you with whatever I can share. Okay? What happened in February of 2022 is something that any citizen of any country, leave aside any investor, could never ever have imagined. On February 24, 2022, the Sensex saw the 10th biggest ever fall in a single day, coming down by as many as 2,084 points. The Nifty dropped 815 points, causing the indexes to correct by as much as minus 4.8% on one single day. What was the reason for this? See the following visuals and you will understand why this nightmare of a day came true. This was the day that saw humanity seeing a new low. With geopolitical ambitions and views that can best be left to political experts, this day saw Russia launch a full-scale assault on Ukraine. Earlier, officials from the US and UK started issuing warnings that Russia would attack Ukraine. War was ruled out by many European politicians, including Ukrainian President Vladimir Zelensky. But the fears came true. On February 21, Russian President Vladimir Putin ordered troops into the regions of Luhansk and Donetsk and recognized them as independent states. On February 22, the Russian parliament authorized Putin to use military force. On February 24, Russia launched a full-scale assault on Ukraine. These headlines glued all of us to the TV screens. Let's be honest, we weren't watching the market charts. We were watching CNN, we were watching BBC, we were watching other Indian TV channels of repute of how in this modern era, a country could invade another country and cause so much of grief and pain to the innocent people who would have never meant harm to anyone. Now, were you buyers at this time? Or were you a seller of your stocks? Remember, the markets closed on February 24, 2022, it was a Thursday, on 16,248 levels with close to 5% decline in one day. 99.99% of us were petrified, aghast with what we had witnessed. So the 0.1%, or let's say perhaps the 0.001% of investors who saw the other side of the story bought during this time. But truth be said, everyone sold what they felt could be the doomsday for investing in equities. March 7, 2022 brought to light the fears that a modern day war could pose. Now, see this headline, for example. Both the Sensex and Nifty fell more than 2% at the start of the week, as expected, due to worries over rising petroleum costs. The reason for this? Russia oil shipments could soon be prohibited by the US and its allies, raising the possibility of a worldwide inflation. Remember, the United States Federal Reserve stated on March 16th that it had approved its first interest rate increase in more than 3 years, a 0.25% or 25 basis points increase. It was a belief that the Fed may need to hike rates even higher, which may push the economy into recession. Inflation hit such a high level that it reached 7.9% in February, the worst in 4 decades. Fuel prices were also rising as a result of Russia's invasion of Ukraine. The central bank, according to its admission, miscalculated the scope and endurance of rising inflation after the pandemic. So, with these fears of a new world order coming to the fore, where inflation was the dreaded nightmare to live with, and higher input costs and lower margins were to be the new way of life, at least for a foreseeable future, how do you think Rajiv ji or Srinivas ji or Pooja ji would have reacted? Sold some or all of their holdings, as probably you also did? Write to me honestly, and I'm sure I'll get back to you. The email has already been flashed on the screen. The headline that other central banks forced their countries to publish was true for India as well. See this headline as an example that surfaced in May 2022 beginning. The RBI on a given Wednesday of May 4th, 2022 raised its key lending rate by 40 basis points to 4.4%. RBI Governor Shri Shaktikant Das said that the decision was taken given rising inflation, geopolitical tensions, high crude oil prices, and shortage of commodities globally, which had impacted the Indian economy as well. Retail inflation had hit 7% in March and held above the upper end of RBI's target band of 2 to 4% for the third month in a row. Indian markets didn't take the news well, as indices such as Nifty fell close to 400 points to the end of the day at minus 2.29%. The Nifty was at 16,677 level on this day, the first repo rate hike announcement day. The week till May 13 saw every session in the market turning red. There was only one day where the markets didn't see a fall otherwise. From the levels of 16,677 on May 4th, the markets kept correcting till May 13th, when the markets had fallen to the levels of 15,782. That's close to 900 points getting shaved off in 7 days. Sentiment globally was weaker after data showed US inflation rose sharply in April, deepening fears of aggressive policy tightening by the Federal Reserve and a global economic slowdown. Now, see these headlines, for example. Now be honest and tell me how you reacted to every day during this period as a red day to the portfolio. It's important that you share these experiences with me. Perhaps I'll be able to add value to that. June 2022 saw near 52-week lows for the indices. The BSE Sensex recorded a fresh 52-week low of 51,425. Nifty 50 slipped below the 15,400 mark, closing at 15,360, down by about 332 points or 2.11%, near its 52-week low of 335. Now, can you imagine, we are talking about a period where all these things happened in just less than 6 months. A spate of bad news kept coming in from the mother market of the US. Inflation hitting a 40-year high, fears of a recession in 2023, and the Fed's tightening the policies. US Fed announced a rate hike of 0.75% points on 15th of June. Headlines such as these made investor sentiments very, very fragile. Even the most positive investors, even me or anybody out there who was supposed to be a positive investor, started doubting their abilities to gauge the gravity of the problem at hand. Many headlines use the term bear markets. So, as innocent investors, we all were petrified to the bone. The bear market, the recession is here. An article described the €1 is equal to $1 with the following phrase: for the first time in 20 years, the euro and the dollar have equalized, indicating that the market believes that the Russian invasion of Ukraine will cause a severe downturn in the European economy. As a result of the change, European businesses and consumers had to pay more for the goods and services they purchased, while the price of European exports dropped right away on global markets. What market gurus described to be weak global cues on fears of aggressive tightening by the Fed led to a fearful investing community. Adding fire to the fuel was the downgrade seen by Fitch. Rating agency Fitch had cut India's gross domestic product growth forecast for the current year to 7% from 7.8% amid a slowdown triggered by global economic stress, elevated inflation, and tighter RBI monetary policy. The domestic market gave in to the global trend despite its strong decoupling scenario and positive macroeconomic data due to ongoing bearish pressure from global stocks, increasing rates, and the dollar index. The global market had begun pricing in the possibility of a more aggressive policy response from the Fed, following the release of US inflation data, which showed a month-on-month increase in inflation yet again. The result? On September 16, 2022, Indian stock markets fell sharply in the afternoon trade, with Sensex falling by more than 1,100 points. Its biggest drop in over 3 months. Nifty, while it finished 2% lower at levels of 17,530. These headlines summarize the mid-September mood point. As the time progressed through September 2022, there was yet again a piece of bad news for Indian investors. This time, the news headline read, "Rupee at a fresh all-time low, slips past 81 per dollar for the first time." On September 23, 2022, Nifty plummeted 302 points or 1.72% to close at 17,327 levels. Domestic and international equity markets this week reacted to Federal Reserve's 75 basis points rate hike decision. The newly appointed UK under Liz Truss, well, there are certain memes going around in social media which call Liz Truss as less trust, announced a mini budget, a massive tax cut of 45 billion pounds. That is about 1.5% of GDP. This was amongst the highest set of cuts in any UK budget in nearly 50 years. This threw the UK into an economic crisis, as those tax cuts meant a lot of government borrowing. This was in direct conflict with the attempts of central banks around the world, including the United Kingdom, to control inflation by hiking interest rates. The UK was witnessing a multi-year high of 9.9% inflation. Come December 2022, the virus still looms and runs havoc in China, while threatening to bring global economies to a standstill. After a respite to the inflationary fears and recession woes, December 2022 has seen yet another kind of a fear that could derail the progress that global economies are making after taming, to some extent, the inflationary pressures. This time, global equities faced a downfall due to the renewed fear of a rise in COVID cases in major economies. This time, there is a new variant named BF7. Global studies have shown that the coronavirus variant, as a subvariant of Omicron, is highly infectious and spreads faster than the other variants. It is due to these fears that on December 23, 2022, the markets reflected by Nifty corrected close to 2%. Now, coming back to our three investors, remember Rajiv ji, who believed he should have turned away from equities in 2022, and Srinivas ji, who believed that this year his portfolio saw a deep correction with all these headlines impacting his investments. And then there is Pooja ji, who said the year 2022 has taught her so much, and frankly speaking, she has learned so much from this year. Now, what do you feel will be, or rather who do you feel will be the sellers? And who do you feel will be the buyers amongst these three investors? Rajiv ji, Srinivas ji, Pooja? Frankly speaking, Rajiv ji sold his holdings long ago as the first news of Russia-Ukraine conflict broke in February 2022. Srinivas ji kept reacting to the stimulus, the events throughout the year as seen on the graph, and kept selling, fearing that he would lose everything that he has gained in the previous years like 2020 and 2021. Pooja ji, on the other hand, did not react adversely to these events. She has been watching the weekly Third Umpire sessions on the Informed Investor app and has been making her own investing book of wisdom for her archives to refer to when such a year returns again. Now, have you noticed that during this episode, there have been video pop-ups when I was speaking about a particular event of significance? Well, Pooja ji watched all those videos in 2022, and the team at Informed Investor kept updating her and mentoring her at a weekly punctuated frequency as a part of Informed Investor education. You too can watch these videos that reside on the Informed Investor app on your Google Play Store or iOS App Store. It's Informed Investor, remember, with a double R in the end. Register as Pooja ji did, and you too can have your wealth of investing wisdom at your fingertips. Now, remember, it was not just the bad news, but there were very promising periods and events in between when the Indian economies made headlines. This was perhaps the silver lining that every Indian investor welcomed, including the team at Informed Investor. Number one, the Indian market has indeed grown at a much higher pace than the emerging market basket. While the emerging markets on a whole have corrected 20% this year, India has gained 3% to 4%. Number two, compared with a year and a half ago, when its economy had just begun to reopen after a devastating surge of the Delta variant, India's stock market is unchanged in dollar terms, and yet its weight in the MSCI Emerging Markets Index has zoomed past Taiwan and South Korea to second place, with almost the entire gain coming at the expense of the gate's biggest constituent, China. India's weight has steadily grown from 8% 2 years back to 14.8% now. We now have reached the second spot in the EM index, surpassing Taiwan. This trajectory is fascinating and speaks volumes about the strength of the Indian markets and their projections. Number three, while the International Monetary Fund, IMF, recently lowered India's gross domestic product growth projection for 2022-23 to 6.8% from the earlier 7.4%, citing the impact of a slowing global economy, stubborn inflation, rising interest rates, and the war in Ukraine. But still, India remains the fastest growing EM nation, and this projection can explain the equity premium. Now, do you remember I mentioned that there are even those who have made even a 10 to 12% plus return on their portfolio even in a year like 2022, when the indices have just done about 3 to 3.5%. Do you know what these investors, though they are very limited, do you know what they've done? Now here are 11 things. Yes, 11, not 9, not 10, but 11 things that these successful investors have done differently. Please make notes of these 11 things. They will come handy as an investor to you, please believe me. Number one, of these 11, number one, these successful investors have a vision for the quality stocks they hold. They dare to buy these stocks whenever an opportunity presented a correction during the year 2022. And they have the patience to hold these even during the testing times like 2022. Number two of those 11 fantastic things these successful investors do. These successful investors have shed the most dangerous words when analyzing an event. And these dangerous words are, this time it's different. Have you ever done that? Number three of those 11 things these investors do. These successful investors have learned that they need to avoid doing too many wrong things while making sure that they do only few things but do them right. Do you also do too many wrong things? Here's number 4 out of those 11 things these investors do. These successful investors have learned that they cannot keep learning by making every mistake possible. Rather, they've been smart in learning from the mistakes of others. Are you also making mistakes or learning from others? Number 5 out of those 11 things these investors have done. These successful investors have learned that in a battle between the patient and the impatient, it is always the patient that wins in the end. Who are you? Reflect this in the notes that you're making. Number 6 out of those 11 things these investors have done. These successful investors have learned how not to follow the herd that's headed towards the panic-based investing decisions. They seek information or views that are different from their own, and they update their beliefs when the evidence suggests they should. Do you also update yourself? Here's the seventh thing that these successful investors have done differently. These successful investors have believed in the long hauling. They maximize the returns by allowing their investments to compound and minimize the trading costs and the taxes involved. Now, what have you done? Maximize the returns or maximize the trading costs? Ask yourself this. Number 8 of those 11 things. These successful investors have known and have understood what they hold. What's a stock's intrinsic value? And what margin of safety are they working with? Well, these are concepts you can learn through in Making Investing Easier on the Informed Investor platform. You will also come to know about these terms. The 9th thing that these successful investors have done is that these successful investors have understood and controlled what they could. That is themselves and their behavior. They know that they cannot control the markets or the news flow. Hence, they have avoided the tendency to see the portfolios regularly after every event. I am sure while watching this episode, you would have refreshed your portfolio at least once. At least once. And that is how imperative and impulsive our decisions are. Number 10 of those 11 successful things, these successful investors have understood and imbibed the fact that all years are not alike. And hence, the returns too cannot be the same every year. Setting realistic expectations for a year is the right way, rather than being fixated on what every year should fetch. And the 11th thing that these successful investors have done is that these successful investors have understood that if equities as an asset class have the potential of generating 15 to 18% CAGR returns over a long period of 2 decades, then it is also possible that over the same period, there will be years marked with negative returns. And that's the understanding every investor needs to come prepared when investing in equities. Else, there are always the returns on savings that a bank gives, right, on your holding, but that does not even beat the inflation. It's a saying, when you dive into the pool, be prepared to get wet and have a towel on the standby. Likewise, when you turn into a successful investor, be prepared to weather the periods of volatile returns and negative returns on your portfolio in between. In the long run, the price always merges with the intrinsic value of a quality holding. Now, hope you spend some quality time with your family after this special episode of preparing to make the most of 2023 from what 2022 has taught. I thank my colleagues Merlin, I thank my colleague Rahil and many others who've worked behind the scenes to make the entire of 2022, including Raj, a very, very fruitful year from the Informed Investor desk. It is without their efforts that this episode, rather all episodes, the 52 that we have done for the entire year, would not have been possible. We take pride in letting you know that we've been there every single event, every single day, every single week, bringing you the insights that really matter, making you educated, trying to mentor you, trying to coach you, trying to be that friend that you need when there is a lot of noise around, to cut through the clatter and bring to you something that you should really know. Without their efforts, again, speaking of Raj, Merlin, Rahil, and everybody, including Mangesh, including Chandramani, including the team at Mumbai, without their efforts, Team Informed Investor would not have delivered what it has delivered to you in the year 2022. I thank them. And I thank you, the viewers who've encouraged us, who have commented on our videos, who've asked us to cover a certain topic, who have told us that they would need a little more of hand holding. That is why I've left my email ID with you to correspond with us. Now, with a wish to meet you soon and with prayers of well-being for your loved ones, coupled with happy investing times ahead. This is Sanjeev Anand wishing all the best of informed investor viewing ahead. God bless everyone.
Did you like watching this video? Then download our app Informed Investor to watch more such informative and interesting videos.